We've just had the Ifo numbers out from Germany. The numbers fell. The business confidence index came in at 97.9 versus 99.1 estimate. Joining us now from Munich is Clemens Fuest. He's the president of the Ifo Institute. Mr. Fuest, as always, we look forward to speaking to you to try and make sense on whether the downgrade or actually the blip that we're seeing on the German economy is transitory or not. Do you worry about the German economy going forward?
Well, I think there's reason to worry in particular about the manufacturing sector. We really have a divided economy. We've been seeing that for some time, and this is confirmed now. The German manufacturing is shrinking for the third quarter in a row, and what we now see is that this is spilling over to the services sector. In today's reading of our index, the weakest part is the service sector now. So there is reason for concern. This trend has to be stopped.
All right. Are you expecting a recovery in the second half of the year?
We are, in fact. So we don't expect Germany to go into full recession because consumption is strong. We had a very strong increase in consumption in the first quarter. This is not going to last. These are one-time effects, but still wages are rising quickly. So the domestic demand is stabilizing the economy to some extent. Construction is also strong, and that's why we expect this to stabilize. But there are concerns about industry, about manufacturing, about the car industry. And this is not just exports. There's also weak demand domestically for industrial goods. So we expect a stabilization, but nothing like any strong recovery.
What's your baseline for the trade war? Is it full-blown trade war between the U.S. and China, or is that still just a risk?
Very difficult to predict. I think there will be some kind of agreement. But maybe not a long-term agreement that will give stability. Currently, the key issue really is this very high degree of uncertainty for companies about the conditions under which they operate. And this is going to continue. That is my feeling. Trump has no interest in a full-blown trade war, one would think, because he wants to win next year's election and needs a strong economy. But still, we never know how he acts. And the Chinese may expect that and may think they are in the stronger position and may be unwilling to give in, so that in the end we might have an escalation.
Mr. Fuest, could you have a recession or a downturn in Germany, but still with consumer strength?
I don't think the downturn in manufacturing is strong enough to take us into a full-blown recession. I don't think that. Also, construction is very strong, as I said, so this is stabilizing the economy. Of course, if there was an escalating trade war that spills over to Europe, that's still a possibility. If there was a hard Brexit, I think that could take us closer to a recession. But currently, domestic demand is too strong that I think that will keep us away from a recession.
Could you just delve a little deeper into how you see this trade war actually impacting Germany? If there are no new tariffs or any tariffs on German car makers, is it psychologically impacting consumer demand in a couple of quarters, or how do you see that playing out?
I think that demand for German products from abroad will continue to be weak as long as there's so much uncertainty in the market. So uncertainty means companies postpone purchases of goods, postpone purchases of investment goods. Consumers will be more prudent, buy fewer German cars. So all that will be a problem for German manufacturing. We also have to see that domestic conditions are not very favorable. We have rising energy prices. Our corporate taxes are high relative to other countries who've been cutting taxes. So this is all weighing on the development of manufacturing, and manufacturing is very important for the German economy.